Now we have already seen that the market exists to facilitate trade. A trade occurs when a buyer buys from the seller and the seller sells to the buyer. If a buyer wants to buy an apple, he needs a seller who is selling apples. If no one is selling apples, the buyer cannot buy them. Similarly, if a seller wants to sell apples, he needs a buyer for his apples. He cannot sell if no one wants to buy apples. So it's a mutual understanding. So in the marketplace, you will always find buyers and sellers, because if there are no buyers and sellers, then the market won't exist. Now, how do buyers and sellers interact? When you see your terminal, there is LTP, or the last traded price, and besides the LTP, there is ask price and a bid price. Ask price means the sell limit orders waiting for a buyer to buy at that price. Bid price means the buy limit orders waiting for a seller to drop down to the price to offer their commodity or stock, or whichever asset which is traded in that matter. For every buyer, there is a seller. Now, this is the common wording that everyone uses, that for every buyer, there is a seller. Yes, obviously, because if there is no seller, the buyer cannot buy, and if there is no buyer, the seller cannot sell. So there is nothing. So it at times becomes funny that if it is so easy that for every buyer there is a seller, then why is the market moving? So yes, logically it's correct. A trade cannot take place without buyers and sellers, but their intentions can be different. Now, intentions can be different is a broader concept that we spoke about different time frame players, and their intentions are different, and because of their different intentions, the market is moving at a different pace every time. It contracts, expands, contracts, expands. So the intention of trade, the primary intention of a buyer is to buy at the lowest price possible, and the primary intention of the seller is to sell at the highest price possible. And that's a logical thing, because if say you have bought a car and you want resale value, obviously you will negotiate with those guys, and you will say that, okay, if he offers 2 lakhs, you will say, no, give me 2,10,000. Similarly, somebody has come to buy your car. He will tell the agent that no, 2 lakh is too much. Tell that guy to negotiate the price and give us for 1,90,000. So a buyer who has put a bid at 8,000 when Nifty is trading at 8,010 shows his intention to buy at a lower price than the current market price. Similarly, a seller who has put an offer or ask at 8020 shows his intention to sell at a higher price. Now, these are orders beyond the best 5 we won't be able to see, but there are orders resting there. Though they both want to trade at a price suitable for them, their intentions are subdued in order flow terms. Suppose if the buyer goes up above the current market price of 8010 and buys all the lots available at 8011 from the seller, his intention is stronger than the buyer who is willing to buy at 8,000. Hence, such a buyer can be termed as aggressive buyer. Now, many of you would have heard this terminology, aggressive buyer and aggressive seller. So on the order flow, we are just getting the flow of orders of the executed orders. We don't know whether it was a market order or it was a limit order. If it was a market order, then yes, he's aggressive. So if you see a 10 lakh buyer on order flow, but he cannot move price, that means he can be a resting buyer who was waiting from Nifty was trading at 8,010. He was waiting at 8,000. It comes till 8,000. His order gets executed. Now, it doesn't make any change to the markets. It is just that his order got executed. The information is only that. There is no information that the market will go higher because there is a 10 lakh buy order. Similarly, if the seller comes down below 8010 and offer everything he wants to sell at 8109, his intention is stronger than the seller who is waiting for a buyer at 8020, and hence such a seller can be termed as aggressive seller. Now, depth of market, one of the ways to look at the buyers and sellers is to have a look at the DOM or the depth of market table on the trading terminal. Now in India, we do not get more than best 5 and we do not get a dynamic updating DOM, but in US markets you can get that. In most of the foreign markets you can get that. You can have that in Ninja Trader with a level 2 data as well. It gives us an idea of the number of buyers and sellers along with their quantity of buy and sell. So we get the best 5. That is what we can get here. That is the best we can have here. As we cannot memorize the quantity, we require some automation to record that activity so that we can use it for analysis and to reach a conclusion to determine their intent. Now, how to determine their intent? So this is an example that there are resting sell orders here, and above that there are more resting sell orders, because as the price goes higher the sellers are benefiting. Suppose once I have bought somewhere here, I am a seller. So what I would do after buying here, I would instantly put a sell order here higher. That means I am already waiting there. So as the auction travels higher, there are sellers already waiting there. So there is lot of sell side liquidity up here. Similarly, if I have sold here, if I have done a short sell, I am already waiting below to buy because that is where I would get profits. So there is a lot of buy side liquidity holding below the current market price. So as the auction goes lower, there will be a lot of buyers coming in because everyone starts thinking with their own perception that okay, the price is falling down, it's very low price, let's buy. So the underlying concept of auction market theory is that the auction goes up to seek sellers and shut off buying, and goes down to seek buyers and shut off selling. Quite contrary to normal understanding, but practically that is how the market functions. So what we were talking, this is a graphic representation that as the auction moves higher, there is a lot of sell side liquidity and the buy side liquidity reduces. As the auction travels lower, there is a lot of buy side liquidity, the sell side liquidity reduces. When there is an imbalance in this activity, you see the sell side liquidity coming higher at this point is the breakdown level, because the sellers waited here, they saw the price is not coming to the level, they start selling aggressively here. When they start selling here, these guys, if they move a bit also, the auction will instantly fall down. Now, the order flow essentials. There are two major differences for plotting order flow in any form in any software: volume at bid and volume at ask, and uptick volume and downtick volume. Once you understand the concept of order flow, choice of the tools can be made as per your style of trading and as per the data feed available for the markets you trade. Most essential requisite to plot precise order flow in any form is the availability of real-time tick-by-tick data. Now, unfortunately, we do not get real-time tick-by-tick data for Indian markets. So anyone saying that they are plotting order flow tick-by-tick is just lying to you. Your choice to believe or not. I do plot order flow, but would never claim that I get tick-by-tick data. The data which we get is completely not that usable. It is not useless, but at the same time, it is not that precise. You get it at every second, and within a second there can be 200 orders executed at different prices. You are getting the aggregate of those orders, and there can be bid and ask in the same, but you get it as a ask, or there can be uptick and downtick in within that 1 second, but you still get it as just uptick or just downtick every second. So now, software for order flow, market delta, footprint, as well as various parameters for plotting bid, ask, or uptick downtick volume. Yes, it is. It is true for e-signal as well. I use e-signal. Then you can use investor RT with AMS delta print add-on, as well as various parameters for plotting bid ask or uptick downtick volume. You can use Ninja Trader with third-party indicators like Gomi volume ladder, final market balance, and Bell order flow. Yes, price ladder is the same thing as the DOM. So now what we'll do is we'll look at the order flow charts. So this is how order flow chart looks, and many of you must be already using it. Now this is uptick downtick, because Ninja as an in the native software, it does not have any provision to save the bid and ask. It is just creating as a best price guess. It is taking the timestamp of the tick it receives every second, and if the tick comes at where the price is higher than the previous close, it plots it as uptick. If it comes at a lower close, it plots it as downtick. Now see, this is where the precision is already lost, because you do not want an estimation. You want the exact bid and ask that were really traded on the exchange, and without tick data it is impossible to get that. So what happens is, over a period of time you develop that mindset to keep on watching what happens. You can the color can be anything. Here see, it's a 5-minute chart, and this blue bar is volume. This is the total number of downticks in this volume and total number of upticks in this volume. Yes, Ninja with GOM volume ladder. On e-signal data. Now if you have true data, this might again differ. So once you need to decide NT7, you need to decide which software you want to use, because all softwares will behave differently. So if you are deciding to use Ninja Trader, then decide the data feed as well. If you are deciding to use true data, then for few days get used to the flow. Once you get used to the flow, it will become easier, but otherwise you will face like lot of trouble trading this thing. It will be like a nightmare. You will end up saying that the price action was much better. So let's have a look at how this was behaving on this day. It is available in ME, but only a licensed new version. But it's a very tough workaround. So There is a forum which actually that guy has made it, not available publicly. So I would suggest that the cheapest option as of now is Ninja Trader. So here, this side is all upticks. So each uptick comes at one price. The number, this is the number of lots. So what I have done is put to get more candles stuffed in, I have just divided by 75 so that you get the number of lots directly instead of the entire volume. So what is happening is the market opens, drives higher, and see, as it is driving higher, the sellers are coming in. The sellers, when the sellers start coming in, we need to see what do they do. Selling is an effort. What is the result? Are they able to move the prices down? So what is your first reference? Your first reference becomes this high, because this is very visual. Everyone would be looking at this. Then your reference is this close, and your reference is the open as well as the low. So you have references stacked into this area. Now what you want to do is consider this as your first demand zone. A very simple idea that the market has opened trying to push higher. You have a previous day high here, you have the close here. So this becomes a nice reference area. Now we want to see if it can push through that area with selling pressure or not. What happens is it pushes down below this low. The moment it pushes down, it loses that aggression. See, here the sellers compared to the buyers are higher. Against 4 we have 14, against 1 we have 6, here against 18 we have just 10, against 11 we have just 10, against 9 we have just 7. So the sellers are losing their aggression here. Now if they are countered with bit of buying also, and the moment it goes above their price, they are scared, because they may be day time frame. If they were other time frame, by now they would have moved the auction down. So that means this is passive selling happening. They have kept the orders thinking that this is a very high price, and now they are not able to move the auction down. The buyers start coming in, you get a positive bar, but then again it has not still crossed the high, and you are getting selling pressure again. So now what you want to do is to confirm that this market might go higher. You want a break of a trading range with a bit of buying pressure. Even few buyers at 1 or 2 prices will do the trick. Either the range needs to contract or the buyers need to show up. Let's go further. Now see, lot of buying happening here. The range is contracting, lot of buying happening here. But this is a sign that there is no supply lower. This is still not a sign that it will go higher. It will go higher once it's able to push higher and then not fall back down. So what happens? It breaks above this reference. Now generally what everyone would do is, the moment it breaks above, everyone would start buying. And because everyone would start buying, there are people who think that this can be an unfair price and already sitting there with their sell orders. What happens is their sell orders get executed. Now their sell orders get executed does not mean that they will be able to move the markets. It's just them who are thinking that these are unfair prices. What happened? They were not able to move the auction at all. The moment it is retracing back to the highest seller value, it is getting buyers. This is your confirmation that the auction is ready to move higher further. Now keep a watch of this level, enter a buy with a stop just below this. You want to give a bit of leeway here, because it might come right at the edge to test. That might also happen. So now once entering a buy, you are trying to control your position till the point you see sellers coming in heavily. Now here they come in heavily, but again your trailing stop does not become directly after this your trailing stop does not become this one. You need to see where is a point where they have successfully lifted it even higher. You can't see any of the points here. It's all driven by short covering. The sellers are going on coming in but not able to drive the auction down, and that is why the market is rising. It is not rising with buyers coming in. Finally, what happens? See how clever they behave. They come and break this low. The moment they break this low, everyone thinks it's all over. The moment everyone thinks it's all over, see, first time buyers coming in above the high and moving the auction up. And this is a sign of good buying. Till here it was short covering. And this is all, these are guesses based on this presented data. Actually, there might be something else happening. But because we have this data, we are considering this as fresh buying coming in. Yes, see, automatically it matched with the candlestick pattern. Now this added to your confidence. So you enter a buy which you have already entered. You can even scale in a position because now your stop loss is very near and you are getting a final confirmation that okay, this is going to go higher. What happens? It keeps on going higher, higher, higher. Okay, this is telling me no to move. Yes. Now that aggression is still visible. Here also there are buyers holding up. The sellers are not coming below this low. Again, there are buyers holding up the moment it breaks any of the lows. There is no visible selling here. All of a sudden, you get this break. When you are getting a break, all of a sudden see how the emotion works. There is no liquidity up here. So market needs to again seek liquidity lower. Where would it seek? At the breakout point. It broke out from here. So this zone is your breakout zone. It will come back to seek liquidity there. It keeps on coming down. These buyers are not able to hold on. So see, the sellers are getting more and more powerful because now they think that okay, it's all over. Let's sell more. Let's sell more. And the market will keep going down till the last seller sells. Now this selling is all over. No supply. The volume drops in a negative bar and there are aggressive buyers lined up here, but not able to move the price higher. So this is a sign that these sellers have lost control, not a sign that the buyers are in control. The moment you see you saw buyers coming in. Now again a confirmation that this market might go higher. Let's see what it did. It goes higher, higher, higher. What happens? You have a high here. It goes till there, exhausts. Now, if it's exhausting, you still don't have a confirmation that this can exhaust because your buyers are coming in. The price is making higher highs, so you don't have any confirmation that this might fall down. Where you get a confirmation is when you get this, when this bar is over, you cannot see any buyers coming in again and a test of this back again. So it's going into this seller's zone to test and getting sellers back again. There are no buyers responding above this. The moment that happens, see the volume had dropped. So there is no supply. So it needs to go above this. If this was no supply, it has to go above this. If it cannot go above this, that means the buyers are losing control completely. The moment you get that chance, and because you are trading like this is a very short time frame trading, need to be very alert. As soon as you see such signs, the probability of the trade is going to be 50-50. Either you will lose or win, but your stop losses are so low. Your stop loss is just here and you are looking at the touch of at least this. because this is the point where they might again react. What happens is they push it down further. So they go down, 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 down. The buyers are coming in, but still able to absorb supply, but not able to push it higher. Finally, what happens is they settle down here itself. Now this is one way of seeing it. The other way is you plot a cumulative delta, or you watch delta bars. You can watch even what like this. So there you are seeing the buyers and sellers separately. Here what you are seeing is at each price the net total of them, the buyers minus sellers. So the net total is -5 at the highs. It keeps on, if these guys were buyers, they should move the prices higher, but you already have aggression coming up here. So there are sellers already in there, and you are not able to go above their price, means a failure would come sooner than later. And the moment a failure comes, see how they react. And then finally countered by buyers here. And that's why it lost the momentum. It has not still given a positive reversal, but this momentum which was carrying with all the sellers is lost here with this counter effect. So order flow needs to be watched combined with volume, combined with the location where the buyers and sellers are coming, and then whether they are able to move the prices in their favor or just they are coming and doing nothing. Now in investor RT, there are different ways to plot that. Now see here, this is showing the, like we were seeing the delta at each price. This is the delta of this swing. So there were buyers coming when this price was going higher. Again buyers coming there when this price was going higher. Now sellers countering, but are they able to push through this? No. That means these sellers don't have any value. Now again buyers coming in, again buyers coming in. Finally at the edge you are still seeing buyers in this. See how the data differed. Because it is countered at the end by the buyers, this will consider this entire swing as a buying swing. And then tomorrow I can say that when the auction was coming down, there were buyers coming in, and that's why we reached here. But this does not solve our purpose in live markets. So in live markets, we need to see what is really happening. Now see here on the cumulative delta, it can be plotted in like this. You can plot it as a histogram. Like we were seeing the buy and sell volume separately, we can see it this way as well. You can accumulate for the day, you can have it per bar. So let's make this red. And make the bars bigger. Okay. So here see, this is basically at each bar, the delta which we were watching in NinjaTrader, this is that delta of each bar. So here the sellers have come in. Finally, see, look at the absorption. So this is what everyone refers to as divergence. The price is making lower lows, but the delta which had gone this negative is countered by a bit of buying and is going into positive territory. Similarly, see here, price is making lower lows and there is delta divergence. Similarly, at the highs, the price is making of trying to go above the high. This has broken the high, the delta starts dropping. So now these are very minor nuances which you have to trade in real time exactly at that point. After that it has no value. So once this happened, and if there is no follow up action, it loses value completely. You cannot stay there in the trade thinking that if this has happened, it will surely happen. There is no surety anywhere. Because if there was surety, it was so simple. You need to put one condition: if delta above so and price above so and so, buy. If delta below so and so, price below so and so, sell. And everyone would be making like millions and millions every day. SL always first keep it means it's not a rule. This is what I do. If I am entering a sell here at the break of this, I will keep it open at first. The moment I see sellers coming in, see this is where the seller stepped in, instantly SL shifted here. Because now I am in profit, now I don't want to lose, and now I have got a confirmation as well. And that we are going to discuss in risk management part, that how these different sort of stop losses affect the trading account as well as our mind. Okay, and the question for Ninja Trader is completely free. You need to pay for Ninja Trader only if you are trading US or any such markets where you are executing automatic orders through Ninja Trader brokerage. So they have a tie up with brokerage houses, and if you are using that, then only you have to pay for Ninja Trader. So Ninja Trader is completely free. You have to just subscribe for the data and subscribe for the indicators. Yes, now there is Finalgis 70k, 17k or something. But now, see, the thing is that they have a business where they want to sell indicators and make money. So obviously they will have to charge a really good rate where they can survive as a software house. Now for me that doesn't matter, but provided I'm looking for programmers, these things are bit tough to code but doable. So don't know when will it work out, but I'm trying to like get some programmers in and program it so that the costs can come down. Because now see, the other feeling is that if it's cheap, it won't be very good. See, again, that expensive is a perception. Because what happens is we are trading against a mass. We are trading against people who would be having more expensive softwares than this. But that does not solve the purpose alone, because the software alone cannot do anything. It is the combined efforts of everything combined together which will finally work out. So there might be people who are like see, investor RT and e-signal costs around $300 per month. It is good. It is good. But they are like, see, I was having a talk with them also to develop it further, because it should be different. To suppose if somebody is doing some innovation, it should be a useful innovation and something different to what is existent in the market. No, feature wise, Finalgo is better. And there are many others. Yes, I can zero your account as a premium service. I get paid and you lose it. That's if that's what you mean by premium service, then yes, I am ready to do that. No, see, the plans, the plans are on that in this life at least, not planning for any advisory or tips because there is no way to make money out of that. My motive is if somebody wants to learn trading, become a trader, mint money, welcome. If they become good, more welcome. That see. I am not alone in this like venture. There are 4 or 5 friends with me, and we are setting up a fund. So obviously, I won't be able to trade it alone. So if there are good traders now in India, it's not legal to trade others' account, but from Singapore or Dubai, it's possible to set up a fund and trade get multiple traders. In India, the setup is a bit expensive because you need to have a prop desk, which itself requires a lot of investment. So I have not reached that level yet. Hopefully, if everything goes right, might reach that level someday. But as of now, I am not at that level, so cannot tell anyone that okay, I have a prop desk and you come and trade. But in future, my intention is always that there are people who are sharp traders but don't have capital. So if we can utilize them, so any of these guys today might turn out to be good traders, but they might be trading maximum 10 lots. If they are given 100 lots to trade, they would maybe perform even better. Because what happens is the trading activity is completely related to the person's risk capacity, and that is where the psychology keeps on wavering because he sees the loss coming in and his strategy changes. Once it's others capital, two things might happen. One is that person becomes completely careless and gives away entire capital in losses. So that is the worst thing to do. And in US there are many prop shops that invite traders and they fund the traders and then let them trade. Now in India that is not possible, but still I always wish that someday I want to do that. So as of now, if premium services, if any, I am just trying to conduct webinars as an ongoing basis, and in a month or two, I am trying to structure it in a better way. Like see, like every time I do a webinar, it's a new experience. Like there are different types of traders. They do not understand even the basics, so they won't be able to catch up if I just start with advanced talks. So for them there should be a structure that they learn step by step. But now the thing is, there is a time constraint because if I am not making money on that, I cannot devote my entire time to that. So for making that stuff, it requires time. So whenever that becomes ready, uh, it will be there and not at a price which is like foreign courses where you pay 60,000 70,000 per day to learn. This would not even cost 60,000 for entire year. Because another thing is nobody can learn trading in a day or two or in 2 or 3 months. There is no way at all. If somebody is telling, instantly leave that place and go away, because otherwise you will be just going for a donation. The guy becomes rich and you get poor. And the sole reason is that I had been through, like, I would have suffered more than you all maybe. Like everywhere I am trying to subscribe to advisories, I am trying to learn from courses, and at the end nothing is happening. The guy shows me profit, and obviously there will be profit. Suppose somebody gives you a call that buy Reliance at 1000, stop loss 990, target 1005, 1010, 1015. Now what happens is, the message comes, by the time you execute, the price is 1003. So you are executing at 1003, and with slippage your cost is 1005. In 5 minutes you get another message, Reliance not working as per expectation, book minimum profit of 5 rupees. Now you are wondering, where is the 5 rupees? And he is right, because he has given you a level. The market was at that level, so we cannot deny that fact. And that goes into the Excel sheet, in the performance sheet, what they call. And then what happens, at the end of the month when you look, their performance sheet shows X amount of profit and your performance sheet shows X amount of loss. How can that happen? But it can easily happen, because it will be always like this. There is no way at all to get in sync. Unless and until you are a long-term player and you are just trading some long-term stocks. Yes, a simple strategy, again and again and again, repeat till you get completely bored. Like, you should bang your head that why am I doing this stuff? See, trading room, again the same thing. The concept of trading room in India especially, that everyone wants to prove their might. I don't want to prove anything to anyone. That because after the trading room, that time I started not up now. I would call that a trading room, because I have been to foreign trading rooms where the intention of having a trading room is to get good traders in and grow together. Not while the organizer should not make money on it. The organizer should charge a fee which is affordable, and as the people grow, it should keep on reducing. Because then it becomes a community, that instead of everyone doing the same, the organizer might get paid for the time, but the organizer cannot mint money on that. And what happens is that like initially in June when I did that 11, no, but infra cost a trader already has, so cannot put the infra cost on people. Yeah, that is already on, but I do not want to advertise, because then what happens is, you get different types of people. And if I'm dealing with as a business, somebody subscribes, even if you keep the subscription I first kept 11,000. Next time I thought that okay, let's do it 3 months and keep it 15,000. Now somebody pays 15,000, that means he has paid his hard earned money. What if he doesn't become a good trader in 3 months? That means time being he has lost 15,000. And I don't know what kind of situation he is in when he is paying that 15,000. He might have suffered a 10 lakh loss, and this is the only money left, and he thought, if I learn here, at least something will happen. And finally what will happen? He loses that. It's not losing of that capital, it's the losing of that hope entirely, that okay, this was the last chance, that is also gone. And you are collecting these bad vibes from everywhere, just because you didn't know what that person's intention is. So I made a point that if somebody subscribes, better to call me, talk, what is their intention. Like just now one guy had called, show me your performance. I said, please don't subscribe. I said, you don't want to become a trader, there is no point. You will get nothing here. You will be staring at the screen, and after 3 months, you will end up paying me 15,000. You will not get anything. That is for sure. I can give you in writing. Now then there were, I think there are 2 3 guys here who had also called that we want to trade, and this is the way we trade currently. So I said, see, if your intention is you want to learn in 3 months, then first get into the basics. Take 2 3 months, get into the basics, watch many webinars are there, watch all that. Once you get a bit hang of it, then do it, so that at least in 3 months you can become something. Okay, so now uh, first we need to go into the question answers of order flow, and then start with risk management. Yes, that's what I was. So see, I was talking to CRK yesterday that there should be some mechanism to judge the traders, and I was planning that only because see, now there are LMS systems available. There is a automatic system where you have a so the person goes on the site, registers, takes the test, gets the marks automatically, and that can assess do the assessment that okay, this guy is a serious trader. Okay, let's get him as a part of the community. Yes, can use the order flow in every time frame, but most preferably intraday. Because see, after all, it is the buyers and sellers coming during the day. We don't know where they have exited. We are seeing the buy and sell orders. That is the fact. But that fact is not attached with whether they are carrying it or not. I would suggest that suppose if you are trading, if your time frame of trading is 15 minutes, I would suggest keep a 15-minute price chart there, but watch the order flow on a 1 or 3 minute chart, or maximum 5-minute chart. That is to know, because your entries will get precise, because you will start, that mindset will automatically develop, that you are anticipating, okay, this guy might move the auction. So you are already setting that tone for the entry. Then you are watching that 15-minute chart. The moment you are just about to get the confirmation, and just pull the trigger. So what happens is you are taking advantage of the best prices, because otherwise what will happen, we will become the same like everyone does. Everyone, it's very easy to trade on candlesticks, but because we want to even beat the guys who are following the conventional methods, so we are like digging this deep under. Otherwise there is no point of like toiling so hard. No, no freeware at all. Yes, generally what will happen, it might start with a prominent B, and then that B would extend lower for a reversal of uptrend. And for a reversal of downtrend, generally it will start with a P, and then that P will extend on the upside. So this B's and P's keep on happening. But more importantly, like those shapes will be there, so that is an added advantage. But you need to also see where it is developing with reference to the previous value. No, I would like see above VH is where the seller's best area lies, because they know that everyone would be looking to buy here. So always look for a sell there first, and below VL always look for a buy first, because market is moving away from the value, not necessary that it can move away that soon. It If it's in a value, the tendency is that it wants to create more value there. So first we give preference to that if we see buyers coming in order flow at the break of the VL, that is the time you try to find reasons to buy. With respect to previous value, always previous value. Current value is just a guidance. And if current and previous value both in sync, then you are on the winning side already. Like the market cannot stay overbought for a long period of time, which that is what everyone believes. Same way, market can maybe stay overbought for a long period of time, but market might not stay in imbalance for a long period of time. Even if suppose you get 10 days of imbalance, a trending market, there will be a time where it will start balancing in that zone. FA, see, keep on looking for auction failures everywhere. Don't get inclined to that just the first hour of trade. Keep on looking at auction failures everywhere. See, this is an auction failure. It went above this high, could not sustain, instantly failed, goes into this fair price. Any failure to go above would lead to, you see, this is a fair price. Now you want to see a prior established fair price. Where is the fairest price you can find here? Apart from this, I can't see it anywhere. Yes, there is a like the prominent patterns, but like to make it simple, I would say look for balances. Look for, like, see, this becomes a P. You get a trending move and then a balance, so combined together becomes a P. So look for that. Then this failure to stay higher, breaking down from the balance and coming below, now this becomes a B. And when this becomes a B, you need extension. If this market is weak and wants to fall, you need extension. So market is establishing value. If it's not able to extend, where can it go? It will try to go into the previous balance, because it's the duty of the auction to keep on going from balance to imbalance and back to balance. Now back to balance can be this balance or can be a fresh balance. Which is the T chart. No, this is a simple candlestick chart. Nothing fancy about this chart. Only thing is I have marked the initial balance highs and lows here. Apart from that, this is just a simple candlestick chart, a 30-minute chart. Whoever plots this chart, it would look the same. These lines, oh, that is deleted. That was drawn for a stock to check the long term balance. Or you mean these horizontal lines? If these horizontal lines are the IB low and IB high, nothing. The first, see, you can see this two half hour candles. The lowest low is marked with this red line, and the highest high is marked with this line. Nifty futures. And okay, if you don't want to see that line, then what we can do is simply delete it. No. Nothing like Donshin channel. No. Though that is the most serious mistake we would do. The moment you see a one time framing market, just move aside. Stay on the side of the one time framing, because can prove to be very lethal. It will go into balance. Someday it will go into balance, but not instantly. Till it is one time framing, do not try to go on the opposite side. Once you see a sign of the market halting, then you can again play with it, because then you know that the risk has minimized, like the risk will be minimal once it's in balance. Yes, FA was not the core part of MP. It was Ray Barros who devised that method of FA. But if you look at the core part of MP, then failed, like auction failures, you can call them. And auction failures can happen anywhere of important range or important reference. So like, see, you decide a random point, and you see something happening, like let's go here. Let's go back to a random date. Okay, here, this is a failure of the previous day high. Now this, if you waited till here, you will like, see, the day has started, and this is a failure of this, because it creates a negative bar and then breaks below but fails. So if you are on a 3 minute or a 5 minute chart, you will see that this failure would be very clean on that, because what would have happened, it would have, let's see and change the time frame and check right now only. What is this day? 3rd Jan. See, you get a balance. Yes, in options also it will work. Any traded commodity, if it's related to a index, best. See, you get a balance here. Push through the balance fails. Your first intention, we spoke about balance rules applicable to this time frame, but your target is only this much. So it fails and pushes inside. It There are chances that this will go to the high of this balance. Now, the moment this crosses, see, it has crossed with initiative buying, and then trend continues. Now, after that, you can draw simple stuff will also work. Once this has happened, what you wanted is a clue. Now, a very simple thing. VWAP ATP same, POC and ATP not same. VPOC and ATP is same. That might also not be same, because at times what will happen, your volume based POC might be created right at the high because that was the highest traded volume at that price, but the ATP might still stay lower. And the POC that we always talk about is based on time, so it needs to take time. So wherever suppose there are 13 trading brackets in Nifty, so the maximum number of brackets through one single price will become the point of control of that day. So here, like, see, you can draw a point of control for this much part also. This is a short covering, you get a stem, you get a balance, so it becomes a P. Here, which is the price where all the prices have traveled, so approximately this is the price. All the brackets have traveled this price. So if we plot this, you will get this as a balance, and we can like check it right now also. We can draw a profile just for this part. See, automatically this became the POC, and this became a P. Auction, see, you can do that, but when you have a easier option, why to go into that? When you can see, markets are visual, you can visually see it. If somebody presents me this chart and tells me this is a daily chart, I would still do the same. I would mark this as a balance and mark this as a POC. And why? See, you can plot this balance as well. Consider these were daily profiles. You got the POC here, and you got a nice balance happening here. If you think that the auction started here, then this becomes a B, but your POC is here, and see, it breaks out of this balance. So in every time frame, the profile concept will stay the same. So if you are drawing a POC for a weekly, need not be a balance. What if the week was like this? All the days traveled like this, there is no point of control. Like, suppose if you had this type of rally on daily, there is no value in this. If you merge everything together, let's watch it right away in this only. Now the software is compelled to draw a value, but there is no value whatsoever. But instead, if your the week is like this, then yes, then there is value. And see, you draw it any time frame and it works. Now maybe I've got that habit of doing it, so I can, like, visually, the moment I see, I just like draw a line, and the market is obviously going to do exactly that, because market's duty is to keep doing this. Earlier it was so difficult, and now I think that okay, wherever we go, it does the same behavior. Now, not 100% of times. So let's say that your analysis is right 80% of times. Out of that 80% of time, your trades are right just 50% of time. So that is my ratio actually. So I am right on my trades around 44 to 45% of times. 55% of times I am losing. But when I am gaining 16 points, and on the second part maybe at times 20, at times 25, at times 30. When I am losing, I try not to lose more than 8 points. Yes, correct. So value area is where the auction has spent the highest time. So highest time is spent here, take the 70% of that area. So you can randomly just like visually draw it, no need of anything else. You visually draw it. Where it has spent the highest number of time at a single price, that is the point of control. Once it breaks, you want to keep this rule in mind: breaks the balance, accelerates, breaks the balance, falls back into balance. That is also a rule. So keep on watching the failure and success above and below. See, so these are the best prices to enter. No, for means you should keep the 30-minute chart in background, because at times what is happening, like let's see, because yesterday was such a day, that expiry day was such a day where that stuff was happening already. So now you see the market is one time framing up. The low is higher, the low is higher, the low is higher, the low is higher, the low is higher. You don't want to get into a sell trade even if your 5 minute gives a sell trade, because till this is happening, this market is not going to break down. Now all of a sudden this breaks down. So that the moment this happened, I tweeted that one time framing has stopped. Now what is the reference here? There is a balance here. So the point of control would have been here when this was developing. So it came into that and failed. The moment it fails and reaches back into this, you have negated this possibility that this might turn out to be either a balance in this zone, or might not even come here and directly push higher. So finally what happened? It pushed higher. Again one time framing up, don't need to get into that. The moment this breaks, now see, one time break saved, second time break they are not going to spare. So what happens is, when this stopped, your stop loss is very near, and your target, I would generally target this prominent POC or the daily open, because day time frame traders are in a hurry to get these levels. The moment this level comes, okay, they will call the broker, buy कर लो भाई, वो आ गया, open पे आ गया है, इससे नीचे नहीं जाएगा. They decide also, as if they are going to move the markets. Yes, but I would say why to combine them? Keep them separate, keep the HVNs for a bigger perspective, or keep the means either of them, keep it for a bigger perspective. Because see, after all, you are what you are trying to do is, at one point you are seeing a volume at price, at one price you are seeing the time at that price. My view on GAN analysis is that everything works if somebody knows it. I trade at on a 1 minute chart. This is my screen and this is the chart I trade. And also let me get. No, as time goes by, you are not, see, that's what is again a misconception, that seeing a 1 minute chart means I'm not trading a 1 minute chart. I am seeing what is happening within, how the value is developing in that each move. So I'm not trading each candle. What I'm trying to see is trying to get and point the reversal as soon as possible. So here, suppose, let's talk about this. What is happening is there is a balance happening. The breakout of balance. So this is the first breakout of balance with volume. So I have kept a trigger that this volume shows a color. So let's zoom in. So now when this was happening, it would be like this. This first break has happened. Now I want to see where this volume is for 3 minutes. This is not a 1 minute volume. It combines all three bars and gives me a signal. So what has happened is the volume created here, this low needs to be broken if anyone even thinks of a reversal. There will be negative bars in 1 minute, but that is not a reversal sign. Now, the moment it comes back and tests, this is my entry. It's the developing VWAP of that day. It's the POC of this entire balance. It's coming to test there and with no supply. This is the best entry you can get. The moment you get a higher high above this is a confirmation you can enter more. Like take a leverage here, because you will get a easy exit within minutes. See what happens. You get an exit here. I don't want to even stay, like my one rotation is done. See now harmonics, I am not familiar with harmonics, but few patterns repeat. So here consider this like this. I would consider this as an impulse. Retrace back, equal impulse. Your ABCD is complete. Harmonics guy would say this is a ABCD. I would say this is an impulse, retrace and impulse. End of the day, our trade is over. Forget everything else. If somebody comes and says, no, this is not a harmonic pattern, fine, it is not. I am ready to expect. I am the most wrong person on this earth. Until the account is green, I am fine. Okay, now coming to your question, that it's an intraday technique. Do not use it for a long term as a composite. Means do not apply those rules to the composite. There is no harm in drawing the composites, but then do not apply the rules that it needs to fill or there is anomaly there, because the long time frame players do not care about anomalies. They do not care about unfilled areas. They do not care about your prominent POC. For me, ideal point is 16. One rotation, see how I derived that. It's a very simple strategy, that this is a Renko chart where you see this chart will only make candles when the price changes. So 27, 30, again 27, 26. So all the rotations, see here 17, 32, 12, 19. Now to get one rotation correctly, I prefer to exit at 16, because very high chances that we will be getting a fast clean entry and exit. If I stay, see now this went to 52. Who knew that it will happen? And most of the traders are failing because of that. They have a very good strategy. They saw a channel happening. They sold the breakdown, but waited for 50 points. 40 points came, they didn't take. The trailing stop loss was at cost. The cost doesn't tell anything to the markets. Your cost has nothing to do with the market movement. Your cost is just your cost, because I also had that fancy. And the reason is, you go to forums or you go to anyone giving a call, they would say buy at so and so. Okay, bought. After a while, market moves up 10 points. They'll say play stop loss, move stop loss to cost. How does that save you? And if you are not sure that what it is going to do, then might as well look for something else to exit. Why to put the stop loss at cost and give away the profits? Okay, so now we'll go to uh, 16. 60 points would be like a dream come true. If I get 60 points, then when you don't see me on Twitter, think that I would have got 60 points. Cool. So what I'll do is again separate this part, and then we go into risk management.